The secret to improve your credit score easily.
If your credit score is holding you back from achieving your financial goals, there's no need to despair. Improving your credit score is entirely possible, and with the right strategies, you can unlock a world of new opportunities. In this comprehensive guide, we'll uncover the secret to boosting your credit score quickly and effectively. According to recent research, there are several credit repair and credit building strategies you can employ to optimize your credit report and increase your credit score. From disputing errors on your credit report to managing your credit utilization ratio, these proven techniques can help you achieve the credit score you desire. Whether you're struggling with payment history improvement, debt management techniques, or credit mix diversification, I've got you covered. I have analyzed the latest industry insights and compiled the most effective credit repair methods to help you dispute inaccuracies and credit counseling services that can rapidly enhance your credit profile. I'm not selling you anything, so just sit back and relax. Just a reminder to subscribe, like and share.
Key takeaways.
Discover proven strategies to quickly improve your credit score.
Learn how to optimize your credit report and manage your credit utilization ratio.
Uncover the secrets to building a strong credit history and diversifying your credit mix. Explore effective techniques for disputing inaccuracies on your credit report. Understand how credit counseling services can assist in your credit building journey.
Understanding your credit score.
Your credit score is a crucial factor that lenders use to evaluate your creditworthiness. This three-digit number, typically ranging from 300 to 850, serves as a snapshot of your credit history and indicates the likelihood of you repaying borrowed money on time. Your credit score is calculated based on the information contained in your credit report, which is a detailed record of your borrowing and repayment activities.
Factors affecting your credit score.
There are 5 key factors that influence your credit score: payment history, amounts owed, length of credit history, new credit inquiries, and credit mix. Payment history, which accounts for 35% of your score, and credit utilization, which makes up 30% of your score, are the 2 most significant factors. The remaining factors, including the length of your credit history, 15%, new credit inquiries, 10%, and credit mix, 10%, also play an important role in shaping your overall credit profile. By understanding these key factors and how they impact your credit score, you can take proactive steps to manage your credit effectively and improve your overall credit profile over time.
Pay your bills on time.
Your payment history is the most significant factor in your credit score, accounting for 35% of the calculation. Consistently making on-time payments is crucial for building good credit. Even a single late or missed payment can dramatically hurt your credit score, so it's important to stay on top of your bills.
Set up payment reminders. To ensure you never miss a due date, consider setting up payment reminders on your phone, email, or through your bank's online banking platform. These reminders can help you stay organized and avoid late payments that could negatively impact your credit score. Enroll in autopay.
Another effective strategy is to enroll in automatic payments for your bills. This way, the payments are deducted from your bank account or charged to your credit card automatically, eliminating the risk of missed payments.
Automating your payments can help you maintain a positive payment history and improve your overall credit score.
According to the third source, even if you've previously missed payments or dealt with collections accounts, paying your bills on time, even if they were late in the past, can help improve your credit quickly. By developing responsible credit habits and ensuring your payment history is in good standing, you can take significant steps towards boosting your credit score.
Keep your credit utilization low.
Your credit utilization ratio, or the percentage of your available credit that you're currently using, is a crucial factor in determining your credit score. In fact, it's the second most important element, accounting for 30% of your overall credit score calculation. To keep your credit utilization low and see a significant positive impact on your score, it's essential to monitor your credit card balances and take proactive steps to request credit limit increases.
Monitor your credit card balances.
Regularly tracking your credit card balances is a simple yet effective strategy to maintain a low credit utilization ratio. Aim to keep your balances well below 30% of your total available credit limit, with the ideal target being under 10%. By closely monitoring your balances and making timely payments, you can ensure your credit utilization stays in the optimal range, which can lead to a swift improvement in your credit score.
Request a credit limit increase.
Another effective way to lower your credit utilization ratio is to request a credit limit increase from your card issuers. By obtaining a higher credit limit, you'll instantly have more available credit, which can reduce your utilization ratio even if your balances remain the same. This strategy can be particularly beneficial if you've demonstrated responsible credit management over time and have a solid payment history with the card issuer. Just be sure to avoid the temptation to increase your spending when your credit limit goes up, as that could negate the positive impact on your credit utilization. By keeping a close eye on your credit card balances and proactively seeking credit limit increases, you can effectively manage your credit utilization ratio and unlock the benefits of a lower ratio, including a positive impact on your overall credit score.
Dispute errors on your credit report.
If you've noticed any credit report errors, such as payments marked as late when you paid on time or someone else's credit activity mixed with yours, it's crucial to take action. Disputing these credit report inaccuracies with the credit bureaus can lead to a rapid improvement in your credit score. According to the first and third sources, resolving these issues quickly can have a significant positive impact on your credit score. The second source also notes that you're entitled to a free weekly credit report from each of the 3 major credit bureaus, which you can use to check for and dispute any credit report inaccuracies. By staying vigilant and addressing credit report errors as soon as they arise, you can ensure your credit report corrections are made promptly, resulting in a more accurate representation of your creditworthiness. This proactive approach can be a game changer in your efforts to improve your credit score.
Become an authorized user.
One powerful strategy to quickly improve your credit history and credit score is to become an authorized user on someone else's credit card account. By piggybacking on the credit history and responsible credit building strategies of a primary cardholder, you can benefit from their positive credit usage without having to qualify for your own account.
Benefits of being an authorized user.
As an authorized user, you can gain access to the primary cardholder's credit history, including their length of credit history, credit limit, and payment record. This can have a significant positive impact on your own credit score, as these factors are key determinants in the calculation. Additionally, you won't need to make a security deposit or go through the application process to build your credit history.
Finding a suitable account.
When selecting a credit card account to become an authorized user on, look for a relative or friend with a high credit limit, long credit history, and a track record of making on-time payments. This will maximize the credit score improvement you can achieve by being associated with their responsible credit building strategies. Communicate openly with the primary cardholder and ensure they are comfortable with adding you to their account.
Secret to improve your credit score.
The key to steadily improving your credit score lies in developing responsible credit habits and diversifying your credit mix. By mastering these strategies, you can unlock the secrets to boosting your creditworthiness and enjoying greater financial opportunities in the future.
Develop responsible credit habits.
The foundation of a strong credit profile is built on responsible credit usage. This means making all your payments on time, every time, as payment history is the single most important factor influencing your credit score improvement. Additionally, keeping your credit utilization ratio low by managing your balances carefully can have a significant positive impact on your score.
Diversify your credit mix. Lenders like to see that you can handle a variety of credit accounts, including both revolving credit, such as credit cards, and installment loans, like mortgages or auto loans. Having this credit mix demonstrates your ability to responsibly manage different types of credit building strategies, which is viewed favorably by the credit score factors used to calculate your credit score. By combining these strategies of developing responsible credit habits and diversifying your credit mix, you can unlock the secrets to a sustainable improvement in your credit score over time. Consider secured credit cards.
If you're new to credit or have a damaged credit history, secured credit cards can be an invaluable tool for building your credit and improving your credit score. These cards require a refundable security deposit that typically becomes your credit limit, allowing you to demonstrate responsible credit management through on-time payments.
How secured cards work.
Secured credit cards function much like traditional unsecured cards, but with one key difference: the security deposit. This deposit, which can range from $200 to $2,000, serves as your credit limit. By making timely payments and keeping your credit utilization low, you can establish a positive credit history and gradually increase your credit score.
Upgrading to an unsecured card.
Many secured credit card issuers, like Discover, offer the opportunity to upgrade to an unsecured card after a certain number of consecutive on-time payments. This can be a game changer, as it not only eliminates the need for a security deposit, but also allows you to continue building your credit history and credit score with an unsecured account.
Monitor your progress.
Regularly monitoring your credit reports and tracking your credit score changes are essential steps in your journey to improving your credit. By staying on top of your credit profile, you can identify any errors or inaccuracies that may be impacting your score and take the necessary actions to address them.
Checking your credit reports.
Make it a habit to review your credit reports from the 3 major credit bureaus, Equifax, Experian, and TransUnion, on a regular basis. You're entitled to a free credit report from each bureau every year, which you can use to monitor your credit progress and detect any potential issues.
Carefully scan your reports for any discrepancies or errors that could be lowering your credit score. Understanding credit score changes.
As you implement strategies to improve your credit score, it's important to track how your score changes over time.
Understanding the impact of factors like credit utilization, payment history, and new credit applications can help you fine-tune your approach and maximize the effectiveness of your efforts. By closely monitoring your credit score changes, you can better gauge the success of your credit building strategies and make any necessary adjustments to achieve your desired credit score. Credit repair services.
While the previous sections have focused on self-directed strategies for improving your credit, it's important to also consider the role of credit repair services. These companies claim to help consumers with credit score enhancement, but it's crucial to distinguish between legitimate and illegitimate services.
Legitimate versus illegitimate services.
There are both reputable credit repair companies and those that engage in questionable or even fraudulent practices. Legitimate credit repair services can assist with disputing errors on your credit report, negotiating with creditors, and developing a plan to improve your credit profile over time. However, be wary of any service that promises quick or guaranteed credit score improvements, as these are often unrealistic and may even be illegal.
Costs and considerations.
When evaluating credit repair services, it's important to consider the potential costs and limitations. Many credit repair companies charge monthly fees, which can add up quickly. Additionally, some services may only be able to address certain types of credit issues, leaving other areas of your credit profile untouched. Before committing to a credit repair service, research the company's track record, review the terms of their services, and compare their offerings to alternative credit building strategies that may be more cost-effective and impactful in the long run. Ultimately, while credit repair services can be a useful tool in some cases, it's crucial to approach them with caution and a clear understanding of their capabilities and limitations. By combining self-directed credit building strategies with selective use of legitimate credit repair services, you can maximize your chances of achieving the credit score you desire.
Rebuilding after bankruptcy or delinquencies.
While the credit rebuilding process may be more challenging for those who have faced major financial setbacks like credit rebuilding after bankruptcy or credit rebuilding after delinquencies, the strategies outlined in this article can still be highly effective. By employing proven credit score improvement strategies and engaging in responsible credit repair after financial setbacks, individuals can gradually rebuild their credit standing over time. The key is to approach the credit rebuilding journey with patience and a commitment to developing healthy financial habits. Strategies like disputing errors on your credit report, becoming an authorized user on a responsible individual's account, and utilizing secured credit cards can all help you gradually credit rebuilding after bankruptcy or credit rebuilding after delinquencies. It's important to remember that the credit repair process may be more gradual for those with significant past credit issues, but with diligence and the right techniques, you can steadily improve your credit score improvement strategies and regain financial stability. Stay focused on the long-term goal of rebuilding your credit, and the credit repair after financial setbacks will become more manageable over time. Throughout this video, I've uncovered a variety of proven strategies that can help you improve your credit score, whether you're starting with a low score or simply looking to optimize your credit profile. By understanding the key factors that influence your credit score, such as payment history, credit utilization, and credit mix, You can develop responsible credit habits and take proactive steps to boost your rating. Techniques like disputing errors on your credit report, becoming an authorized user on a trusted account, and using secured credit cards to rebuild your credit can unlock the secrets to improving your credit score. Remember, credit score improvement is a journey, but by staying focused and committed to these strategies, you can achieve the credit score you desire and enjoy greater financial opportunities in the future. Effective credit management is essential for your long-term financial health. By mastering the techniques outlined in this video, you'll be well on your way to taking control of your credit and positioning yourself for greater financial success. Stay diligent, be patient, and watch your credit score soar as you implement these powerful credit-building strategies.